Welcome back. No problem. Markets still near record highs as North Korea blinks on an attack on Guam. If fears of nuclear war were not enough to cause a correction, is there anything else that could? This market is up again. Dow Industrials up 7 points right now. We go to market watchers Scott Martin and Jonathan Honig right now. Good to see you guys. Thanks for joining us.
Thank you. Thank you.
Your take on where we are right now, Scott Martin, after this, almost 20% rally since Election Day?
It's pretty amazing, Maria. I think we're at a point now where the markets are kind of taking stock of the malaise, let's say, or the stalemate in D.C., as you talked about a lot in your previous segment there. And that's where I think the problem lies ahead. I don't necessarily believe it's in the next few months. But my goodness, if we get to the end of the year without health care reform, without tax reform, without infrastructure spending, the list goes on, you're looking at a 2018, Maria, that's going to be very difficult from the market standpoint because all of these promises have basically fallen flat.
So what about that, Jonathan? What do you do then in an environment where markets are running, waiting on some policy coming out of Washington, valuations a little higher than you would like, even if some people think it's way too excessive at 18 times earnings? What's your take on markets?
And just new high after new high, Maria. And as we've talked about for months now, the real absence of fear in this marketplace. So for me, to borrow a line from Game of Thrones, I do think that winter is coming to this bull market. I mean, the warning signs for me isn't even so much what's happening in Washington, but the breadth of the market, Maria. 2-to-1 new 52-week lows today, 2-to-1 new 3-month lows. So not a lot of stocks doing well, especially the FANGs, those high-tech stocks which led the market higher.
So the FANG companies like the Facebook, Amazon, Netflix, Googles of the world are soaring. These companies have racked up incredible gains just in the last few months. Are they excessive? Would you sell these names right here?
I think that depends on one's individual position, Maria. But I see the weakness in so many of the stocks that were leading, and even some stocks like energy, new lows across the board today. If the market's going to rally higher, what's going to bring it so? That's what I'm keeping an eye out for.
These stocks that you mentioned, the technology names, Scott Martin, I want to get your take on this. They've rolled over. Look what's happened to energy since the inauguration. Look what's happened to technology in the last couple of weeks or so after really leading this market higher since Election Day. Your take on all of this, Scott?
Well, Maria, energy's been a dying dog for a couple of years now, and I'll tell you what, I think contrary to Jonathan's point, we're starting to see a little bit of reemergence in the financials and industrial areas, which can take some pressure off tech. But I'll tell you guys, I mean, just look across the S&P 500, whether it is energy, or in consumer staples or consumer discretion, you're talking about stocks that need tax reform, that need the tax breaks. Think about the trillions of dollars, especially, mind you, in the tech sector, that are sitting overseas because of the preferential tax treatment they receive over there. Yep. If we can get that reformed, to get that repatriated, my goodness, you're going to see another up leg in this market. The problem is it doesn't appear we're going to get that resolution.
Yeah, I think you make a great point. Yeah, go ahead.
Can I build on that quickly, Maria? I mean, yes, the market soared, as you said, almost immediately after the election, I believe in anticipation, as Scott pointed out, of tremendous tax reform as the president promised. The longer that goes on, the more investors say maybe it's time to take the money and run.
Well, what about the Fed? I mean, yesterday we heard obviously from Dudley. He gave the U.S. dollar support overnight, and the dollar has been one of the issues for this market, down year to date. But what about the Federal Reserve in general? I mean, one issue that Sam Zell brought up earlier on the morning show was the fact that the cost of capital is probably the single most important thing you want to look at when investing in stocks and when looking at this economy. If the cost of capital is at rock bottom, businesses are going to borrow, and we're going to see more borrowing, and very rarely do you see interest rates moving up at the same time as stocks moving up. So are we entering a period now of higher interest rates and lower stock prices? Scott?
I think that's a great thing, Maria, is that interest rates have been so low. That's going to keep the music playing, if you will, on this bull market. But Janet Yellen, as lovely as she appears to be in both appearance and in her dissemination of the policy, remember, she's kind of on the chopping block here. Hi, Janet. She is actually potentially going to be removed in February, Maria. And so you're looking at a possible completely different Fed with respect to their interest rate policy. Therefore, that could put another brake on stocks if, as you mentioned, all of a sudden borrowing costs rise, as Sam Zell said, and therefore that prints a crimp on borrowing.
Yeah. Jonathan, you think that impacts stocks if Janet Yellen is at the Fed or not?
I'm going to go out on the limb here, Maria, and say that I expect a credit shock during the Trump administration. of debt, and it's the debt market which has been so manipulated for the better part of a decade now. So the Fed controls the short end, doesn't control the long end, and I think if you start to see a continuation of interest rates rising as they've been in recent months, it's, to borrow a line from Neil, it's Katie bar the door.
So it all fits into your scenario that perhaps we're entering some dicey times right here. Gentlemen, good to see you both.
Yeah.
Thank you so much.
Thank
We will
you.
be watching right now.